Good afternoon, good morning, and good evening, one and all. Welcome to another edition of The Smoking Barrel. I'm Rustin Edwards, based in Geneva, with my illustrious Toasty Coast host, Mr. Matt Stanley in Dubai. How goes the
Hello.
heat?
It's all right, mate. I mean, do you know what? Actually, at the weekend, Eid Mubarak to everyone who celebrated the weekend. Went away with the family. It was very nice. Actually, I managed to sit outside for lunch on both days, which is for June is highly unusual. So I was waiting for Greta to send me a letter of apology about global warming because it was nice.
So you were sitting outside while the sun was up. Let's clarify this. Not when the sun was down and it's about 2 in the morning.
Correct. Which for early June in the Middle East is highly unusual. So it was very nice. However, summer is here since then. So don't worry. It's as it always is. Normal services has resumed, but it was nice to get outside and have some nice lunch and be with the family. So yeah, all good over in the Middle East. How are things in Genève?
Well, we get a bit of summer weather coming our way, going up to 31 degrees going into the weekend, but then we get our typical rainstorm. So happy days, bring the rain. Got to get those crops watered and keep the food flowing.
Yeah, yeah, I know it had been a bit of a disaster for UK because they've hardly had any rain, I think, at all in May. So it was a bit of a yeah. But it is what it is. It's
But
it's
this is not the Weather Channel. This is the Smoking Barrel.
well, exactly.
Just to make sure everybody's not lost in what we're actually talking about. And if we want to talk about oil, 66.80 front month Brent.
66.80 for a month Brent. The one thing I'm really surprised about is the strength of the Brent curve. I was having a look yesterday because someone foolishly said to sell Septec Brent. Don't do that. If you did that, you're a fool. Shouldn't have listened to me. I think it was trading about a month ago. It was trading, Septec was trading at 8 cents. This morning, it is trading at, oh God, I don't, oh
Buck and
God,
a quarter.
$1.30. Uh, you'd be down quite a bit. Like I said, don't write in. But this is the amazing thing about oil markets. Resilient out to the end of the year. I mean, we had saw Novidec in Contango last week. That's up at 22 cents backwards. Markets look like they're remaining tight. So,
Well, I don't
you
know if
know,
I'd call them tight. I would just call them that the geopolitical situation in the world has maintained a strong backwardation of the curve. I mean, we look at the geopolitical situation. I think the biggest one that's on deck is Iran and U.S. reproachment. And it looks like that is not happening yet. Iran has rejected some of the proposals given by the United States and is floating another proposal back to them, which will be part of the agenda of the Iranian U.S. talks in Oman later this week. But nevertheless, that doesn't look like that's happening anytime soon. That's probably putting a risk premium back in the market as people would be concerned that there'd be some type of attack on Iran if the talks fail and Trump holds true to what he's been saying.
yeah. Look, it's interesting because I'm hosting a webinar about tanker freight later on with my colleague Matt, who's great. He's our head tanker analyst. And we do it about every quarter, something like that. But we've seen not a significant uptick, but certainly an upward trajectory in the number of vessels that are crossing Suez Canal again. Going through the Straits, Bab el Mandeb, and I don't know if that's owners owners becoming a bit more comfortable with the situation there. I know, is that a reflection on what is happening between US and Iran? And there are still issues going on right now, and we know there certainly are in Eastern Med as well, unfortunately. But yeah, it's things are definitely moving. I don't know. I think people seem to be coming around the table a bit more, Israel and Gaza aside, obviously. But I just wonder how much of it is geopolitical risk that's priced into markets on a structured basis, I reflected in structure, or if it is physical tightness. Because the biggest thing that we've really seen, questions that we've had asked, and the answer that we're giving is yes, OPEC are bringing back more oil, but the vast majority of those producers are able to consume the oil domestically. Saudis direct crude burn during the summer. But what happens when the weather does start cooling down?
That's never been counted as part of their OPEC export production quota. That's always been part of their internal consumption. And they've
No,
always
no, no,
done that.
it is because they're
Even
allowed
when
to.
they've had hard quotas, they've always consumed their own heavy fuel into their utility
No, because
base.
they're burning crude.
Yes, and they've always included that as part of the utility base during the summer. It's never been part of their quota exports.
Okay, I'll let you argue with them in the background there, but she's right, so I'm gonna sit with her. Um, but yeah, look, I mean that's what the vast majority of people have been asking, and those questions are still there. There is still some geopolitical risk, but yeah, that's you look at high sulfur fuel oil markets that have gone ballistic over the last week. We are in the middle of Middle East power generation season. It's getting hot here. Okay, UAE's gas, but other places, especially Saudi, are fuel oil, if not burning direct crude oil, or burning crude oil directly, I should say. But no, look, I mean, we're going to move on to the demand story now. Of course, we are. Where we're going to argue again. I mean, I just want to pull up an article that my colleague Esteban wrote through LinkedIn, actually. Esteban's our sort of lead analyst on our refined product demand, what things look like. So I just wanted to share this, what you sent yesterday. Now, this is trying to make this clear. Q1 numbers are what is the actual data right now. Early Q1 data supports this outlook. So not the US, not China, not developing economies, but Europe leads global gasoline demand growth in 2025, up 100,000 barrels a day, year-on-year increase. You can see that the dark line here. This is obviously from here is based on Kepler estimates, but Q1 has come in now. But you look at the average 2024, you can see it down here, significantly higher. So gasoline demand surprising to the upside in Europe, and a lot of people who commented on demand forecasters that were coming in when we did have the big tariff issues and all that kind of thing, you know, have been proven right. Demand looks like it's holding up pretty well. Granted, it's only Q1 right now, but I mean, the US isn't doing as well, but I still think it's pretty early to see what the repercussions there are. But Europe leading the way on gasoline demand growth, which is highly surprising to a lot of people, I think.
Well, it would be surprising because I mean, again, you're talking only 100,000 barrels a day growth year on year to 2.2 million barrels. So it's not like it's showing a massive spike in demand growth. It's just the fact that it's the highest demand growth in the world compared to other markets. I mean, the United States is showing demand declining on
Yeah.
gasoline year on year. Nigeria, West Africa shows moderate to marginal demand growth. So at the end of the day, you end up with a much you can become the leader of the world, but not by doing anything outside of what your normal demand looks like.
Right, exactly. And that's really where this story comes in, because this is the yin to that yang. Asian gasoline import demand at its lowest since COVID, as June, July balances will lengthen more than usual. So look, I mean, um, what's that down to? Outlook skewed by China is decelerating demand lengthens and the domestic market and export program increases despite unappealing ARB incentives, i.e., they ain't using as much. There'll be more to export, and you can't really move it to many other places. Look, the one bright spot is the Trans-Pacific Hub because of Pad 5 and the fact that refineries in California are shutting down, but demand is still there. And barrels are being called on from further afield. So lots of a lot of that US West Coast material is coming in from the Singapore market. So that's a bright spot. But no one likes to read this bloody word, do they? Asian gasoline import demand is lowest since COVID. Where are we? 2025. See, you go you go to the chart that we were on earlier, where gasoline demand in Europe was here. Well, it's flipped on its head when it comes to what we're going to see in Asia. Jan, Feb, March go back to that consistent Q1 down here, whereas the average is up here.
Which, if you look at the demand growth in China or in Asia versus the demand growth in Europe, that means you basically have very negligible demand growth in gasoline world year on year, as 2025 gasoline demand growth in Europe is countered by the demand loss in Asia.
Yeah,
So
I
if
mean,
anything, we probably have negative demand growth globally on gasoline year on year, marginally lower, but not
yeah, I mean,
not
look,
massively.
it's a tale of two stories everywhere. I mean, the World Bank came out yesterday with their global economic growth forecast. They've downgraded it to 2.3% from 2.7, and it's all down to trade tensions and US tariffs. It said trade tensions, especially elevated US tariffs, and a major drag lowering the growth outlook for nearly 70% of economies. Emerging markets are expected to grow at 3.8. But there was a quote the guy said um, about the developed world. Let me pull it up. Talk amongst yourselves for a minute, because it was really quite profound, quite a bit of a bit of a soundbite. Um, Hang on, go on. You say things now. You say things. I'll have a look. Let me put it up. But no, it's we'll talk that tale of two stories. Yeah, look, I mean, US and Europe. I can't find it. I can't find the quote. Chat GPT went down yesterday. I wonder what people did.
Oh my God,
People
that
are
must
like,
have caused mass pandemia. People have to actually write something from their own keyboard, not to tell ChatGPT to write it for
yeah.
them.
One cheeky git said this morning, "Oh Matt, I saw Chat GPT went down yesterday. Is that why I didn't see one of your commentaries?" You can imagine. You can imagine my reaction. It's nothing to do with it. A little bit. No, no, not at all. But look, I mean that growth forecast. But they increased their growth forecast for the UAE. And they increased their growth forecast because OPEC are bringing back more oil. So it just seems to be a lot of, there's always moving parts to every economy, especially when you're looking at the global economy. But yeah, look, I mean,
I mean,
it's,
if you have trade reproachment, which has happened, based on the announcements yesterday that China and the United States have agreed to return to the Geneva framework for trade, if anything, that should give you an upside bias to some type of energy demand, just because that should hopefully bring manufacturing back. However, when you look at the recent data out of China, it is still showing de-inflation, without stagflation in their economy, as their PPI numbers keep dropping month on month and their PMI numbers keep coming down on manufacturing.
yeah.
So if you do get some trade rapprochement back with China and the United States, are we going to start seeing oil demand tick up, or is the fact that it's an energy demand story, not so much an oil demand story? And with all the alternative energy supply that China has, is that going to be more coal versus gasoline?
Yeah, yeah, look, you're right. I mean, when you look at all this stuff though, and I think people are becoming a little fatigued about what the implications tariffs may have on the global economy. People, we're nearly halfway through the year, and all we've spoken about all year is the implications of tariffs. I think people are a bit bored of it, and I think that it's really
I'm not
important.
bored with it, but it's still the basis of
I
your,
know,
your trade flow. And if you put tariffs on things, that does impact general
I know,
production, general economic activity. So
I
you do
know.
have to be aware of it. You may be bored with it, but it's kind of like being bored about OPEC meetings.
Well, no, it's not. No, it's not that at all. I disagree. Because if my boss asked me to get in front of a client and sort something out, i.e., in terms of tariffs or whatever it might be, and it took me 6 months, I'm not very good at my job. And I think that's what people are like. Just get on with it. So I think these talks between the US and China in London, and I do hope they went to the pub afterwards yesterday. They were like, "Come on, let's go and have a pint of ordinary," like I said in my commentary the other day, and a pie at the Guinea. And they've got together, and now they're going to go back to Washington and Beijing and say, "This is what we've discussed. We think this is a fair compromise." And next week there is something announced. Markets can breathe a sigh of relief that there is clarity, and we can go into the second half of the year not with all this uncertainty, but whether that will happen or not, I'm not sure. People are thinking, well, there's a bit more optimism back in markets. Brent's at 66, 70. Um, Considering everything that's going on, and I'm going to use that term for one of the last times, hopefully, um, this year, Brent markets have been remarkably resilient, even with 800,000 barrels a day back from OPEC over the last 2 months.
But I still think a lot of that resilience is all baked into the geopolitical risk in the marketplace at the moment. I mean, it is a case that you still have an upside potential with Iran, upside potential with Russia. You have the EU discussing dropping the price cap on Russian oil from 60 down to $45 a barrel, putting more vessels on sanctions. All this is going to be discussed at the G7 conference in Canada next week, or I think it's this week. Um, so that does put an upward bias and upward bottom support on crude prices because if you start losing those flows, then markets will go higher as they will start getting squeezed in the front.
Yeah.
So traders are always going to buy the structure and keep the structure supported as long as there's a potential for a geopolitical event that could upset the apple cart and drive flat price higher. And it's the easiest way to pile on the risk.
Yeah, I want to actually bring up because I don't want to put in CPC, but I just wanted to see, okay, what's happening with Russian exports for crude and
Well, I'm
condensate?
sure Russian exports are moving along just fine because, again, as we've said earlier, oil finds a way.
Yeah,
Um, and even if they put the price cap to 45, oil will find a way. Just when crude oil was at $80 a barrel and Russian Urals was probably at $70 market value, people were still moving Urals crude and claiming it was under the price cap. So, I mean, even in this low flat price environment, Urals crude will move. And even if they put the price cap at 45 and crude goes to 90, Urals crude will move.
yeah, I agree. I mean, I'm just I need to this is skewed because of CPC. Um, but let me just share this with you. So this is Russian exports of crude and condensate um, by destination country. So let's go, mate. 4.7 million barrels a day, and we've got 1.13 going into China, 1.5 going into India. And I mean, that has really, well, I mean, let's go back a year, May 2025, and then let's go to May 2024, 4.9. I mean, down 200,000 barrels a day, roughly.
Yeah, but
But let's,
that could be seasonal maintenance more than anything else. I mean, 200,000 barrels a day is a bit of a hiccup in my mind. I wouldn't say that's a relation to sanctions. Um, and
no. Well, I mean, it's enforcement, isn't it? And things seem to be becoming a bit, the screw is being turned a little bit, isn't it? But look, you can see when after the invasion here, I mean, I've probably pulled up this chart before. The light blue line there is certainly a lot
can you
more.
share with us the rest of the class, Mr. Stanley, what you're looking at?
This is Russian oil export terminals into India. What do you mean?
Oh, could you put it on the screen, sir?
Oh, sorry. I didn't press share. Sorry. Go back, edit that out. No, it's fine. Sorry. This is Russian oil exports, crude and condensate, um, split by destination country. So goes back to all our data. But let's just do the last 2 years because that's where I was in the first place. Um, sorry. Crude and condensate last 2 years. So May 2025, 4.9 million barrels a day, roughly. You can see that there, 4.891, 1.5 going to China, going to India, 1.2 going to China. And then May last year was 5 million. And India were buying a lot more, percentage wise. June, obviously that shrinks again. China, their volumes shrink a lot more going into Turkey. Netherlands, I'd have to check on that. That's probably CPC stuff. But yeah, I don't know. Like I said, the screw is turning, and it's going to be it's a lot more difficult. I think with the price cap if that drops, then that's going to be significant. That is that only incentivizes places like China and India to buy the material, though, right? So
It would just keep that flow. I mean, I don't think anything would disincentivize them from buying it. I mean, even with the sanctioned vessels, you still have the stories of vessels that are lightering off coast and then taking sanctioned oil or taking a sanctioned vessel, lightering to a non-sanctioned vessel, and the non-sanctioned vessel brings in the crude. So, I mean, everybody finds a workaround to make it all work to fall within their rules and regulations they put to show good faith that they're trying to do something to curtail the illegal flow of oil.
yeah,
Um, but as you flip from Russia, you got to look at the monster on the block, the new kid on the block, South America, which is becoming the big growth story probably of 2025, 2026 on export volumes as South American crude oil production, sans Venezuela, continues to move
Yeah.
up.
Yeah, look, we spoke about this earlier, and I just want to bring it up because this really does put it into context. So what I've done here is split this by origin countries. Let me just go back and let me make sure I'm sharing. One sec.
Yes,
That was
please
on
share this
purpose.
with the rest of the class,
Yeah,
Mr.
you can
Stanley.
coffee place. Can you see that? Right.
Oh, there we go. Hello.
So this is Brazil and Venezuelan exports of crude oil. This is over the last 2 years. You can clearly see, you know, Brazil, we've got in June, we've got 2 million barrels a day that Brazil will export. But I want to go back to all data so you can really sort of see the split. So here we've got this is the dark one. This is Brazil. You can see that upward trajectory. So actually, this month here, April, sorry, 2.1 was Brazil's highest ever on record production per day. They've just had a new FPSO that's come on, but you can see Venezuela just how much that has dropped off. Our data goes back to 2013, and how much Brazil have picked up that slack. Latin America as a continent has really been going great guns over the last 2 decades in terms of how much they're producing. But that barrel that Latin America produces, that sort of heavy sour barrel, Brazil is sort of
Well, it's
like,
a mix. Venezuela is where you get your heavy sour from. Brazil's been mainly lighter and sweet. So you do get a shift, and this kind of plays into the whole crude flow shift in the diet that has happened globally, where you're trending more to lighter sweet barrels in the global marketplace because a lot of the heavy sour barrels becoming exported restricted.
right,
Iran, Venezuela. You've got issues with Mexican production. You got issues with Ecuadorian production. Not sanction related, but more operational issue related. And therefore, we do end up with this more lighter sweet barrel. I mean, I think the only real large producer of heavy sour is Iraq, Russia, and Canada.
right.
And Canada has even been increasing, although probably the one tight part in the market that puts any upward bias is the fact that Canadian crude has been shut in by about 350,000 barrels a day due to the not the Iranian, excuse me, the wildfires up in Alberta
Yeah, 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 yeah,
curtailing
absolutely.
production. And so that is probably the only place you have in the market that has any tightness, and that's been contributing probably to the WTI Brent spread coming in so much. I mean, that spread's about $2 a barrel now, which would tell you that the arb to the Europe is closed or should be closed based on current freight rates, because you don't
293.
have that Canadian barrel.
Yeah, 293 for August, 316. It's about $3.30 for the balance of the year. But yeah, it's tightened a lot, I agree. But yeah, I mean gas oil cracks seem to like they're collapsing today. That must be down $2 a barrel. I'm not quite sure. I know there has been a bit of a, backwardation in the gas oil market. Ice gas oil's been at the highest it's been since March. Is that another European demand story, or is it, I don't know, someone having a play?
The BP Rotterdam refinery fell over last week. That's
Yeah.
400,000 barrels a day of refining capacity that came offline. So obviously, it always puts an upward bias on the ICE gas oil contract when a local refinery shuts down unexpectedly.
Yeah, of
Uh,
course. So it's still
so
fragile, even though the story is that demand is plateauing and refineries are going offline. Europe still needs the oil, man. So it's still pretty fragile. What have you got going into the close of the week and start of next week? What's going on?
Well, we have we'll see what happens with the negotiations with Iran and USA. I mean, I think that's probably the biggest one on table.
Yeah,
Do those negotiations break down, or do we actually come to some type of real agreement that makes sense for both parties? It's a bit. Is it right? Is it wrong for Iran to have the right to enrich uranium? Hmm. Depends on what they do with the uranium after they enrich it. If it's all for peaceful usage, then they shouldn't be, in my opinion, shouldn't be too negative to having people watching what they do with it. But if they try to keep it secretive, then that just adds more fear that something bad's going to happen in the future. But
Yeah.
nevertheless, I think that's probably the biggest one on table right now is what happens there. If you have the G7 come to an agreement on putting tighter sanctions on Russia or tighter price controls on Russia, it's kind of funny. They'll put a price cap, but they won't sanction outright, which is interesting. But they'll sanction the ships moving the oil. So it's a bit of they're still fearful of putting anything hardcore on Russia to curtail their activities in Ukraine and all their other disabling activities. But nevertheless, it's trying to hit the transportation side is a bit of a limp-wristed attempt to curtail their cash flow.
Yeah, I mean it does seem a bit of a rinse and repeat, but yeah, I think the market's got an eye on that. What's going to happen with Russia? What's going to happen with Iran? But I think the market is solely concentrating on right now if a deal is struck between the US and China, because I think if it is, a lot of others will follow, and I think that, like I said, that really gives people clarity going into the second half of the year about confidence to put positions on. I think that's the issue, is that returns on crude this year have been crap. So people just haven't been putting money on. If there is, if we do sort of see a trade deal, I think we pop up to 70. I'm not sure how much higher it can go after that, um, but yeah, I think that's a
There
big
is a
thing.
trade deal. It gets signed. I think, but the market's already priced in a trade deal being done. I think $66, $67, that's about as much as you get out of that. Like
Do you
I
think
think you
so?
get up to 70 if Iran and US talks break down.
Mm, okay. Well, I want to see that I think as soon as they come out and Trump says there is a trade deal, I think the market does react and I think it goes big. That is how things have been this year, which has been ambiguous and lots of warnings about, and shots fired. And but I think once you have a kind of, this sort of like a peace offering, once the trade deal is signed, I think Brent has another $2 or $3 a barrel in it. I do.
Well, we'll see what happens when that happens because right now oil markets aren't doing much different than where they were when we started off this conversation today.
Yeah,
Still at
yeah.
66.73 on Brent, so they're down a little bit, but nothing massive. Structure is still holding, and all's right with the world.
Well, let's see. Let's see how much longer that lasts. And look, what have we got? We've got probably next couple of weeks, we're going to record and then we're going to take a little break for the summer.
Yeah, July and August is going to be holiday period, so there'll be a couple of records for July and maybe a couple in August, but probably second half August, not the first half.
Yeah, yeah. But who knows? I mean, we might have to do one from a beach somewhere, Russ, if there is all these trade deals done. We don't have to be sitting behind the desk, do we? We'll wait and see. But look, yeah, look, happy trading, everyone. Keep your eyes on the headlines, like I always say.
Happy trading, good luck, and catch us on Spotify, YouTube, and LinkedIn. And have a good day.
Ciao.